Kung Hey Pachoy. It's Wednesday, and that means it's time for Straight Talk, where we delve into the issues that matter. I'm Chito Lozada.
And I am Teddy Montelibano. Happy Chinese New Year to everyone celebrating. We're live on Daily Tribune's Facebook page and Tribune Now on YouTube, bringing you fresh perspectives on today's pressing topics.
So today we have a special guest who's making significant contributions in the field of macroeconomics and sustainability.
Yes, our guest is at the forefront of research that shapes investment strategies and promotes sustainable practices in the financial sector.
So we have Jomar Lacson. Please welcome him, the head of macroeconomics and sustainability research at ATR Asset Management, or ATRAM. It's a pleasure to have you here, Jomar.
We're eager to hear your insights on the intersection of economics and sustainability. Thank you for joining us, Mr. Lacson.
Hi. Thank you, Mr. Teddy, Chito.
So,
Okay. Could you explain what your work is in your company?
in the ATRAM.
Okay. Well, maybe just an introduction to the company itself. ATR Asset Management is an independent trust company. So we're basically fund managers. Um, and we cater to both institutional and retail clients. Some of our products are actually offered on your GCash app. One of which is a fund called Sustainability Development and Growth Fund, which is powered by the research that our team has. So that's just one aspect of what I do also for ATRAM. So apart from macroeconomics, I also do sustainability research, which drives the fund's investment framework. But mostly it's going to be, for me, so macroeconomics. So I provide the forecasts for macroeconomic forecasts for the Philippines for the team, and these inputs are actually utilized by our investments team, and basically this is where we make decisions on which stocks or bonds to invest in, and like how much what percent do we invest in specific stocks or bonds.
Okay, great.
Yeah.
So what's the macroeconomic outlook for the year of the wooden snake, Jomar?
What year is it?
Well,
What's the
year of the wooden
Wooden
snake.
snake.
Wooden
Would
snake.
you believe that?
What is that? I mean, what is that?
Well,
Is that what are the what kind of deer are we supposed to expect if it's a wooden snake?
but
I'm not Chinese, but
I'm
so, but
Chinese.
My understanding
I
it's about change. There's
change.
people think that when you see snake, it's the cobra or something, but apparently my understanding it's wooden. It's like
in the
green
yes.
snake, so it's more cautious. It's not like
To the Chinese, it's cautious
There's
change.
a cautious change. So
Okay.
would that be referring
How would that
to the new
there's a lot of
developments in the
there's a lot
United
of
States?
dynamics going on in the world right now.
Yeah.
I mean,
seems very apt, right? I mean, if you think about it, the change that has happened just like January 20. So that's a real change, and we're seeing it. But you see the thing the funny thing about the markets is that doesn't wait for that change to happen. It tends to anticipate. So back in
Anticipate.
November and December, the markets were reacting to
Yes,
what
yeah.
January 20 is going to be, and after January 20 will look like. So I guess that's where most of the outlooks that have been presented have been sort of derived, where the change is going to come.
There was
But the
sorry, I'm sorry.
no,
Please.
I was just gonna say that, you know, one of the things that my understanding of the year of the snake is that not all bad. We just need to be able to go with the flow, or be flexible with the change, and it may not be as bad as we initially thought, no, or markets were initially thinking. So you can see the volatility in that we experienced in December. Was a lot about that. The I guess the fear over the uncertainty of what will be the policies,
True. Yeah.
and our own outlook is let's wait. The first quarter is going to be, or actually the first half is going to be critical to expectations of growth for 2026. Actually, I'm just thinking more like that because it's going to be the policies are going to be crafted. So it's not going to be perfect at the 100 at the onset. We've seen that so far, where you initiate a policy and then pull back a little bit and then reapply.
True. Yeah.
So that's the uncertainty that we have to uh, um, sort of be prepared for.
So the overall, the net effect of the changes in the U.S. would be positive to us, or how do you see it?
More
Too
of
early,
the
huh?
way I see it is when you look at
Too early.
GDP.
I'm
Yeah.
sorry?
GDP.
Well, when you look at
GDP,
GDP,
okay.
there's this one stable part, which is us, the domestic consumption. For us, we feel our anticipation is it will accelerate, uh, continue to accelerate rather, because inflation is already coming down. So that should give more, sorry, not really more, but more. It will the disinflation itself should allow your purchasing power to be preserved a bit better than it happened in the past couple of years. So that means that there's more impetus for consumers to spend. So the
Spend.
domestic part seems to be intact. So the policies affect more on the external side, which is like your
External.
exports and your imports, your capital flows. So those are the areas that where the transmission would be coming in. But we're really a small economy, and we don't affect global prices. So
Except for
which in a sense
rice.
shielded tayo, no? We're quite shielded from what happens outside us. We can
Also,
rely on our consumption to maintain growth at least above 5% for GDP.
How about the series of directives of the U.S. president,
the
like on
initial ones,
tariffs,
the initial ones.
the initial ones? Would that
Well,
be,
the most feared is tariffs, right? I mean, at the end of the
yeah,
day, those are the ones that have received most, I guess, attention because the theory is it's inflationary, and the markets react to that part, the inflationary component. But from a GDP perspective, it's not really much because look, how much is our trade for the US? It's only $12 billion. So even if you apply a 30% tariff on, I mean, assuming it's really um, chump change, no? So if
Yeah.
what the US needs is a lot more to finance its deficit. So
deficit?
the application of tariffs will be to bigger countries with
China.
bigger balance of trade deficits with the US. So from a trade perspective, I don't think
Yeah.
it's material. It still hurt us. I'm not saying it won't. It's just that what we need to be a bit more, where the markets kind of anticipate more, are what's going to happen to inflation with tariffs, and that's not going to be answered within the next few months.
Immediately.
It will be answered probably 2025 December or something, somewhere towards the
A
end,
year
and
after, yeah.
maybe even 2026. So it's just a matter of that markets anticipating what will it do. Um, Textbooks would say it's inflationary, but how much? I suspect it's kind of it's it's material, but not the way the market's kind of like anticipating. And I understand also why the Federal Reserve is turned cautious, a bit hawkish, because um, since I guess since World War II, and when the new financial system emerged from World War II, tariffs have
Yeah.
actually been coming down. We've had several, um, back then it's still called GATT, like General
Agreements on tariffs and
Agreement on
trade.
Tariffs and Trade. So, but the tariffs have been going down, and then we had WTO, which replaced that. So it's the first time that you might see, I won't say it will happen, but you just might see, instead of tariffs going down, it might go up. So your models that
Little
that are
risky,
used to
no?
predict inflation, taking into consideration tariffs, um, may have to be tweaked a bit to anticipate this parang structural change in tariff structures or tariff trends.
Yeah.
Uh,
Yeah,
the,
because well, I think there are two things that really are in my mind. How two major two major changes, or rather two things that I'm thinking about are, first of all, of course, the re-election of Donald Trump, who's sh- a figure, a major world figure that's second and last name seems to be
so,
uncertain. And uncertainty is the thing that's often used to describe him. Then the other thing is that what about in the local scene, in the domestic scene, how would I guess the volatility in the political field and the China the, the continued presence of the Chinese in the
West
West Philippine
Philippines.
Sea, how would that affect the? I mean, how would that affect the the country in terms of attractiveness to foreign investors?
Yeah, I think, well, no, on the portfolio side, we have to just separate the portfolio flows and the foreign direct investments, right? So the portfolio flows, which means stock market and all, I think that's really more on it's affected by a different set of factors. But the presence of the China in the West Philippine Sea is more, I guess, in the scope of foreign direct investors. And I think coming from there's an interview with Trump, I think, President Trump, that where he said that trade-wise, the Philippines isn't really there's no, it's not material for us,
Is
but
that really? Yeah.
strategically, it is.
Strategically.
Yeah. So taking the cue from that, and we'll probably see, the policy that previous administration had set up will be maintained.
Yeah.
So we just need to watch for the signals coming from China, because they have their own set of economic challenges that they need to factor into the geopolitical sense. No? So it's a negotiation part. Hopefully, this will allow us to stabilize the situation. But the way we kind of monitor it is the density of maritime assets within that area. So whenever it kind of peaks, then something kind of, I think investors might become worried about it. But so far, I think it's fairly stable. So which means that we're all in a kind of like a waiting game,
Yeah.
and let's see how the negotiations, will be between China and the US, and how we participate in that, in promoting regional stability.
Okay.
Another indicator
The
that
stock reserve, right?
most people are watching for is inflation. So, in the near term, what's your outlook for the prices?
Well, we see inflation for the Philippines decelerating. And the primary reason
Decelerating.
for this is because of rice prices. So the way we're tracking it, it seems to be, at least for NCR, it's averaging around 46 pesos per kilo, with some markets actually doing 40 bucks per kilo, which is actually quite low. Now, coming from this period last year, it was doing more like 51 pesos per kilo. Again, NCR market sample, not necessarily nationalized. So there's actually reason to believe that um, on a year-on-year basis, the rice prices have come down. Therefore, this should translate to um, lower, I guess, a decline or a deceleration in that heavy component of the CPI or the inflation index. Oil itself, we foresee that our own prediction is it will be fluctuating around between 65 to $80 per barrel in the first half, and then we move up a bit to about closer to $90 going into the second half. Now, the assumption there is that demand from China as it recovers, it's kind of heavily dependent on how interest rates are going to go, but our view is that China will have some recovery, and that will provide some demand also for oil. That's why we see oil slightly moving up to a moderate sort of level of volatility. So given that those two factors, rice price declining, generally stable oil price, inflation should be headed down or slower, not the down, but decelerating to about 2.7% in our.
Oh, that's low. 2.7.
Yeah,
For the entire
averaging
year.
for the year.
Okay. So we're going on a commercial break, Jomar. So
Yes, sir.
we have a lot of questions still. So we'll be back.
And this break is brought to you by Bayad Center. Hashtag bigger, better, younger bayad. And you can buy it all. Meralco, ang liwanag ng bukas. SM, we've got it all for you. Smart. Live more today. Union Bank. It starts with you.
Tune in to Daily Tribune's show aimed at addressing the needs and problems of our OFWs from different corners of the globe. Hear about their plights and success stories every Tuesday and Thursday, 3 p.m. only on Daily Tribune's Facebook page and Tribune Now on YouTube.
Straight Talk dives deep into present issues of leadership, politics, business, and more. Engage in insightful conversations with industry shakers, government leaders, and trailblazers every Wednesday at 10 a.m. only here on Daily Tribune's Facebook page and Tribune Now in YouTube.
Utol, once just a colloquial term for a brother or sister, today the same term stands for a better option to your transportation needs. Unified Transport Operations League, or better known as Utol, was established to give you an alternative to ride-hailing, with the concept of availing the service with care and compassion, as if it was rendered by your own sibling. Now, who would you prefer to drive you home? Utol, the ride-hailing app to consider.
Hi, Jomar. We're back. So generally, do you see the global economy to maintain its slowdown? And how would it be affecting the whole situation here in the Philippines?
I think for the global economy, it's a bit more difficult to predict because of the rest of the world is more affected by the tariff policy. So right now, what we're seeing here is I won't say rhetoric, but more like indications. So just more signaling. This is part of that negotiation where you're trying to signal what you're gonna do. This may happen, of course. I mean, I'm not saying it won't, but I think what we've learned so far for the past week is that on the tariff side, it didn't the worst case scenario did not materialize like immediately. We may get there, but I think there's a dial down a bit, which is helping markets, I think. Understand that, like example, like the wooden snakes, like, okay, maybe it's not that bad. So there's hope for that. But anyway, we're still at the initial phase. So like I said, first half, let's see what's gonna happen. I think we'll see these policies crystallize. But it would be too much to expect things to be clear on day one. So far, what has been clear, and that's what I generally share to our team, is that what if you're gonna ask what policy came out, and it's not
Immigration.
trade, it's immigration.
It's
Immigration.
immigration, right?
Okay, so that one is now you have to just switch. How does that now affect inflation? So these are the questions that need to be asked. We don't really have the answer at this moment, but I think that for the US, my understanding is they're more like pretty much like the Philippines, their GDP is like services oriented. Um, so the immigration policy will probably have a faster effect on whether it's growth or inflation. So things are that's something that needs to be kind of monitored. But if you look at the numbers that have been, on day one, I don't think it's that material at the moment. But you'll probably see again. The first half is very important to watch out for, and this is why the Federal Reserve has to be, let me say cautious, but needs to be uh, um, to run the data on a potential shock on wages or unemployment.
By the way, how do you project the end 2024 growth? Do you see it as the whole year averaging 6? Or
I think we're looking at around 5.8%
so it
for
won't hit
GDP, Philippine GDP. And
won't hit
it's
6?
not the domestic side. We're just saying that the domestic side, we're actually okay. It's their external side. You've seen exports weaken, and that's not necessarily US. It's actually uh, other parts, like say China. So we know China still has many economic challenges. It's translating to that. And again, all of these signaling on tariffs, just think about it. Just run the thought process. If you're a manufacturer and exporting to the US, right, and there's a threat of a tariff hike, you don't want to build up too much inventory ahead of that. You have to make sure lang that you keep inventory moderate, so that if the tariff does come, then you don't have too much of a problem with being overstocked. But when you do that decision, means today that I'm gonna control my inventory today, it means I have to reduce my production also today. So that now creates a chain reaction, and that's I think what we're feeling in our export sector. You'll see that on the numbers with uh, capacity utilization for semiconductors. It's
Right.
actually back down to like 2019, sorry, no, parang 2020 levels, going back down. So the recovery kind of stalled a bit, I think, on the electronics, which is our biggest exports component. No, so it's more on the external side, and it's being affected by these uncertainties that's have been signaled. But ultimately, when they stabilize, we need to have more clarity on the policy itself. I think that should now translate to recovery. But the good thing for us, I think, is we have a very strong domestic sector for consumption, and I think that's what investors tend to realize. If you're looking for some market that's stable amidst some trade war, or what, it's probably gonna be us.
Any regulatory changes that or
Yeah.
government policies that you're currently monitoring that could impact the stock market or the field or the economy in as a whole?
We're talking here of domestic policies.
Mm. Well, we're not really tracking anything at the moment that's like super critical. I think we've done a lot of the work already for the past 10 years. So we just need to see that, I guess, the fruition of all those reforms. Having said that, we still do have twin deficits, right? I mean, we have a balance of
Right.
trade deficit and we have fiscal deficit.
The
So
fiscal
any
and trade.
regulation, any new regulation that can help us increase our revenues and bring down that our fiscal deficit, or at least ensure maybe even accelerate, no? So we have a specific target to 2028 for our deficit to GDP. So if we can bring it down even faster, actually that helps the markets. So any news on new taxes, actually those are the ones that we are monitoring, closely.
The policies, I guess, that there will be no new taxes, but recently the government borrowed about $3.5 billion. So, do you think the government is on the right track in addressing the fiscal shortfall right now?
Well, I think we are on track as far as their targets are concerned. I mean, we have yet to study the effects of the. I know there's some news on the budget for this year. No? I mean, but we haven't really reviewed that the implications. So, having said that, what's more important, I think, is the interest rates. No? So one of the reasons why our deficit has been high is because of interest costs. So all the
Okay.
borrowings we had during the lockdowns, I think it's about $6.5 billion.
Wow.
So that was there's a grace period for that, and now that grace period is gone, and we're now basically paying on the debt that on interest rates which are quite high. So the 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 strategy there is really to um, slowly refinance that, because what we want at the time is the interest rates to start going down, which is a bit slow, because initially we expected like 3 or 4 Federal Reserve rate cuts. Now I think the market's just anticipating 2 for 2025, which means
Uh-huh.
that if we were to borrow and refinance that debt, it's still at a fairly high. We'll get a
High.
little savings, but all governments right now, I mean, not just talking about the Philippine government, no, but even the U.S. government wants um, if we're gonna issue government securities, no, to borrow, they don't want to pay it, let's say 6.5% for us, right? And we didn't want to get it at a lower rate. And once interest rates start coming down, that helps the fiscal deficit to to shrink,
You
because
shrink.
it's a huge component right now of our total expenditures.
Yeah, that payments, the principal and the interest rates are
Right.
basically not part of the yearly budget, isn't it?
Mhm.
But this have still have to be paid.
Right.
So we need to raise a lot.
Yeah. So that is, uh, I think, previously, right? I mean, the concern is when we have 70% debt to GDP ratio. Uh, that's trouble. But right now we're able to maintain it on 60. So
60. Is that
the key here, we're not sure if we'll be able to bring it down within this particular period because of high interest rates. But I think we have to look at it from a more medium-term perspective, and sort of like go back to the pre-COVID levels.
like
That's I think
uh,
the goal here.
what's our ratio before COVID?
I think at best we were doing about 35 or
Oh,
37% to
so that's
GDP. It was
double.
really a good number, and it's just that COVID had to happen. So it's like,
But comparably with other nations, how's our debt to GDP ratio?
well, compared to the US, we're actually
Better,
much
better.
better. It's like, I think they're about 110 or
Wow.
120% of GDP, right? So, um, but of course they have exports, no? So they have a lot of sources of revenues for that, no? So, but for us, our own experience, I guess it's more of like a rule of thumb. Given our experience, is that 70% is like a high risk level, and that's why um, it's a disciplined approach, really, to make sure that even with such shocks as COVID, we need to be able to keep our fiscal levels manageable, given our economic structure. It kind of depends naman. So like I said, the economic structure of the US is different. Therefore, their 110, 120% debt to GDP is okay, I guess. Not saying okay, but more of like it's you're capable of still servicing that.
Servicing. Yeah.
Okay, we'd like to get your thoughts on this. Mr. Lacson, what are some of the key risks and opportunities that you see for foreign investors looking to invest in the country, and what advice would you give them?
Um, I think based on our own sort of discussions with our counterparts, it's really the peso dollar rate that's top of mind uh, for the markets, and it's understandable, right? I mean, if you given the experience we've had over there since 2022, um, that this is a primary concern because even if you earn X amount from the market, once you bring the returns out, translate that to dollar your home base return, the weakness of the peso can also just make it negligible. So it's understandable. Uh, so it's the reason why the peso is weak is actually more like the dollar is strong. So the policies of the Federal Reserve and these signals affect it. So that's the reason why we say that in the short term, it's some volatility, something that you have to kind of bear. Um, or just sort of not bear, but more like manage
Manage.
with your exposures. And the uh, the other part is when we look at our own central bank policy, we're also cutting rates in. So the signals are not just from one source, another source. So it's very critical for investors to sort of like find where things will kind of reaching equilibrium nila. And that's maybe the time that they will have a better sense of where the peso dollar rate is
Yeah.
should they head towards to. But our own view is that this is just short term. Of course, we're actually anticipating strengthening of the peso, but not in the first half because of all of these the uncertainties generated by these signals. They need to be clear first. So we may see the peso still around 57 for above 57
57.
for the first half, averaging at least so that specific mean before coming down. And the reason for that is because at the end of the day, I think everybody, the whole market agrees that there will be rate cuts in 2025, and rate cuts translate to um, capital flows from the US or from developed markets to emerging markets like the Philippines. That should strengthen the peso, which is positive for us in terms of foreign investments. So we just need to, I guess, wait it out a bit. All of this is very external in nature. The good thing, though, and I think not to what should be central is that our GIR is actually we reached a high of $112 billion. I've never seen that $112 billion. And I remember the lows also. We had about like $9 billion in reserves. So what does this mean? It means that we have sufficient level of dollars to manage the volatility of the peso. It's just a matter of whether you're going to use it, um, you know, I guess, I won't say properly, but more of wisely. So you have to pick your own levels that you have to defend it. And that is the key there. We should have, we have, I think the central bank has been doing it very well. And it's just a temporary situation at this point in volatility. But if interest rates come down, we should see the peso strengthen. probably towards the
They're
second
asking
half
us-
already of the year.
They're asking us to
That was fast.
they're asking us to wind down kind of fast. So, but as maybe lastly, just to cap it all, what are your top concerns again regarding the Philippine macroeconomic outlook for the next for the next year? Well, not almost the end of the year. I mean,
Yeah.
for
Next
the
year,
remainder of the year,
maybe
and how would you?
till
Yes,
the second half of next year.
yes.
Well, our own view is that it's really that. It's how it's an external, our risks are more external in nature at this point, because from a market perspective, our valuations are actually very attractive historically. The growth, not just on a GDP basis, but also from a earnings perspective, still double digit, at least based on the forecast for 2025. So it's a matter of really the cost of capital or cost of doing business. And right now, cost of doing business in terms of inflation is it's decelerating. It's at 2.7% is our forecast. Interest rates though is where it's a bit more I guess challenging to predict, because it's affected by the Federal Reserve's decisions, which is in a sense now dependent on
Yeah.
how policies will emerge from the new administration. And correspondingly, there's also a currency issue on that. So the cost of doing business will be in the short term will have to be navigated. So there could be some uncertainty here, not necessarily volatile. It's just that this is a period where investors try to look beyond now, because if it's too volatile, you become tactical, meaning you're just looking at the next days, weeks, and even a month, but you can't see beyond the full year, right? So that's where your strategy comes in.
True.
And once we've cleared that phase, wherein okay, we now have more clarity, then this is the plan. So that should now translate to. So that's the main
That, yeah.
external risks are the main concerns of market, and of course the economy, because I think that from a macro perspective, the key issue is the fiscal side, and one way we can address that is when interest rates come down, we are able to reduce our own borrowing costs.
Great.
So
yeah.
Ted,
Yes.
the time certainly flies fast.
Yeah, very fast. But let me remark, it's so everything
Yeah,
at this
I would
point
like
is very
to-
tentative, no?
We'd like to
Very
keep
tentative,
Jomar for some other questions, but we have
Yes.
our
We hope to see the
programs.
we hope to see more your insights and
Right.
your prognostications on the economy in
When-
your writings.
in your writings. And Jomar Canlas, ladies and gentlemen, will be writing for the Tribune.
Thank you so much,
Thank you.
Tribune,
Yeah.
Sir Teddy, Sir Chito.
Thank you, sir. Okay, what an very enlightening discussion. We would like to
About the
we'd
economy.
like to hear from you again,
Right.
in the near future.
So thank you so much to Jomar Lacson for guesting with us in Straight Talk and sharing
Pleasure
his
to be here, guys.
expertise with us today.
Okay, and we certainly appreciate your insights into macroeconomics and sustainability.
Sustainability.
And for those just tuning in, I'm Teddy Montelibano.
And I'm Chito Lozada. Thank you to our viewers for joining us. Don't forget to like, share, and subscribe for more episodes of Straight Talk.
And join us next week as we continue to explore topics that shape our world. Until then, keep seeking the truth.
Mga ka-Tribune.
See you next time.
See you next time.
This public service announcement is brought to you by Meralco.
Alam nyo ba kung saan napupunta ang binabayad nyo sa Meralco? Dito sa series na ito, isa-isahin natin yan para maipaliwanag ko po sa inyong lahat. Ako po si Josel Dariaga ng Meralco Corporate Communication Office. Alam nyo ba na pag nagbabayad kayo ng bill sa kuryente, nasa mga 20% lang on the average ang napupunta sa Meralco. Sa katotohanan, nahahati sa iba't ibang components ang inyong electricity bill. Kumbaga parang pizza lang yan. Kasama sa binabayaran natin ay ang generation charge na napupunta sa generation companies o mga nag-ooperate ng power plants, transmission charge na napupunta sa system grid operator ng Pilipinas, na National Grid Corporation of the Philippines, at iba-ibang charges na napupunta sa gobyerno. Tulad po ito ng mga subsidies, taxes, universal charges at fit-all. Kung tutuusin, tulad nga nabanggit ko, nasa around 20% on the average ang kabuang bill ang binabayad sa Meralco sa pamamagitan ng distribution charge. Ito na ang pinaka-epektibong sistema para sa electricity consumers. Iwas abala ito para hindi na isa-isahin pang bayaran ng iba't ibang kumpanya na dinadaanan ng kuryente. Naway, nabigyan linaw ko po kayo kahit papano sa inyong mga katunungan ukol sa inyong electricity bill. Hanggang sa muli, ako po si Manong Joe, ang inyong lingkod.